Hi guys, welcome back to Dynamic Global Market Report, reviewing this week, March 23rd at 2020 trading. First of all, before we begin, here is the disclaimer. All stocks analysis in these presentations is for educational purposes only and not as a recommendation to buy and sell. Please seek your licensed investment or financial advisors before deciding to buy or sell any stocks or financial instruments. Now, let's begin the report reviewing the market index performance. This week, we see the Dow notches up to negative 24% up from 32% end of last week. So do with the S&P 500 notches up negative 21% from a negative 28% last week. The peer index faded a bit from 8 last week to 23 this week, despite the COVID-19 cases in the US climbing above 100,000 mark, surpassing China. This may well be due to the stimulus financial package signed by President Trump on Friday, worth 22 trillion US dollars to ease the financial setbacks affected by the COVID-19 business lockdown, not just in the US, but as well as other parts of the world. Wall Street. Wall Street Journal this week reported that the index market may well be on the way to recovery, as the index now bounced from last week 32% drop to 20% level. But let's have a look closely on the S&P 500 index chart here provided by Refinitiv. Last Friday, the index unable to surpass Thursday close, but overall this week posted the S&P 500 index higher than last week, with three consecutive new high made from Tuesday to Thursday, as depicted by the bull candle here. And the bull candle here. However, when we look at the volume, it was fading away since Wednesday. This gain could be rolling away by next week as volume move in the opposite direction, not in agreement with the price gain. So we need to look closely on what price action will give us in the coming weeks. We must approach the market with caution, despite the investor intelligence chart depicting the bear now crossing the bull. Normally, such action where bear cross the bull may signal a market bottom or reversal as depicted previously here around the end of 2018 and early 2019. But again, we should look what price action will be telling us next week or the weeks to come in the S&P 500. Using the algorithm developed for Quant Dynamic, we have identified well over 20 stocks under the watch list for the next buying spree once the market signal a recovery. Registered members will get the watch list in the email this week. And if you're interested to become Quant Dynamic members, please do email us. Okay, let's move now to the commodity market quickly. We can see now the oil market dipping lower, closing at $21.84 this week, compared to last week at around $23. Normally, lower commodity prices will push stock prices higher, and this could be another sign of perhaps market bottom or reversal signal. Again, price price action next week will be our guide on how to approach the market. Now let's have a look at the global stock market heat map provided by here by CNBC. S&P 500 posting a negative 3.37% on Friday close. But what interesting here on this heat map is the ASEAN market posting again in this region of the earth on Friday close. It leads by Indonesia with 4.76% gain and Japan at 3.88%, followed by Singapore at 1.66% and Malaysia 1.13%. Australia posted negative 5.30%. In Europe, it was on the negative side with UK leading the losses at negative 5.25%. The positive gain in ASEAN region may well perhaps due to China now slowly opening back uh, its businesses and factory, now ramping up production of medical supplies, especially facial masks, sanitizers, and ventilators to be supplied to the global community. Malaysia's gain this week may be driven by the increasing demand of medical gloves too. Okay, that's all, folks and guys. And if you happen to follow my blog at quantdynamic.com, make sure to check the latest video from Trevor Neal on the interesting insights between institutional and retail traders and how you can profit from it. It's a three-part video. Please do check it out, and I hope you like it. That's all for this week on Market Update. And if you need to contact me, here is my email. Hope to update you again next week for updates. So thank you guys and bye bye.